Hi, it's Tim Quast, founder and CEO of Market Structure Edge, and we're talking about some basics for using Edge, and the core of Edge is diverging supply and demand. And I want to give you several quick examples, and this will be your roadmap for how to use Edge. These are the things that you want to look for. It's how you want to think about using the platform. Let's suppose that maybe you're watching TV, and somebody says, well, Pepsi's reporting results. Well, let's look. Let's look at supply and demand in Pepsi. Very easy to do. Just put it in the search box at the upper right there, and we could look at Pepsi, and you could do this before they report results, and you would know what's likely to happen, because supply and demand are the inputs of all people's thoughts about the stock, all the machines, all the models, everything goes into it. So we don't have to read all that or know what people are thinking. We can see it in supply and demand. And so look at Pepsi. Flat demand at 5. It's a 5. It's a big and stable stock. It doesn't move a whole lot. And supply declined ahead of results. Well, what's that likely to mean? It means the stock probably rises with results. Insufficient supply, steady demand, probably price goes up. Well, you can go look. That's how you use the data. Don't just randomly buy stuff because a chart tells you that the stock rose a couple of days. That's not reliable. Let's look at another example. The best performing stock in the S&P 500 in 2022, at the point I'm doing this, was Oxy, Occidental Petroleum. And you could go look and see why. If I extend the view out, let's say year to date, to look at supply and demand in Oxy, it's extraordinary how much time it's spent above 5. And that's why. And if you just own it when it's above 5, when the demand begins to diminish, you can capture the gains, you can take the gains, not the chances. You don't want to own Oxy when demand is below 5, and the data are very clear on that. Let's look at one last example, everybody's favorite, Tesla, and perhaps the most traded stock of all by retail traders, and look at supply and demand in Tesla. It's not whether you own Tesla, it's when you own Tesla, and you want to own Tesla when there's excess demand and insufficient supply. Divergence. There the stock price went up. Since then, demand's at 1. Supply is over trend. Don't own Tesla during those periods. Wait for the conditions to return that give you an opportunity to take gains, not chances.